Welcome back. Today we're diving into how to invest in US real estate with zero money down. This isn't a get-rich-quick scheme, it requires strategy and hustle. We'll explore 7 strategies from financial profiling to creative financing. Stick around for game-changing tips on finding motivated sellers and using private money. Let's jump in. Let's clarify what zero money down really means. It's not about getting a property for free or magically skipping all costs. Instead, it's a strategy that lets you acquire real estate without using your own cash for the initial down payment. You're not pulling out your wallet for the down payment. Instead, you're finding creative ways to cover those upfront costs, often by leveraging resources and opportunities that others might overlook. The traditional down payment is replaced with funds from sources like loans, investment partners, or even grants, each one offering a unique path to property ownership. This approach isn't always simple. It can be complex, involving lots of paperwork, negotiation, and a willingness to think outside the box to make deals work. Your effort, research, and negotiation skills become your down payment, transforming you into a smarter, more resourceful investor. Along the way, you'll develop deal-making skills and financial creativity that are invaluable for building a strong, diverse real estate portfolio over time. Zero down is all about using creative strategies, like seller financing, lease options, or partnerships, to finance your purchase and make deals happen. It's about substituting your own capital with other people's money, resources, or expertise, so you can get started even if your savings are limited. Understanding this concept is crucial. Without it, you might get frustrated or discouraged when things don't go as planned, so clarity is key. Now, let's get you ready to attempt this strategy with confidence, preparation, and the right mindset. Remember, it's about being a financial architect, someone who designs and structures deals, not just a buyer who pays cash. Next, let's move on to building your financial profile, the foundation for your zero-down journey. To secure 100% financing, your financial profile must be strong and reliable. Lenders want to see that you're not just a good risk, but a great one. This means demonstrating responsibility, consistency, and a clear understanding of your finances. A high credit score is essential. Aim for 740 or above. This shows lenders you manage debt well and are less likely to default. If your score isn't there yet, start improving it now. Pay every bill on time every month and keep your credit utilization low. Ideally, under 30%. These habits steadily boost your score and show financial discipline. Lenders also check your debt-to-income ratio. Keep it attractive by minimizing unnecessary debts and increasing your income where possible. Organize your financial documents, tax returns, pay stubs, and bank statements so you can provide them quickly when needed. Being prepared saves time and shows professionalism. Be ready to move fast when a deal arises. Opportunities can disappear quickly, so having everything in order gives you a real advantage. Build cash reserves for a safety net, even if you don't use them for the down payment. This cushion helps you weather unexpected costs and gives lenders peace of mind. Demonstrating you have reserves shows lenders you're prepared for unexpected expenses, making you a more attractive borrower. Your financial preparedness is your leverage. The more organized and ready you are, the more negotiating power you have. It's all about reducing lender risk. When lenders feel secure, they're more likely to approve your financing. A strong profile builds confidence in lenders and opens doors to better terms and more opportunities. Remember, you're not just buying a property, you're acquiring a skill set that will serve you for years to come. This knowledge pays dividends throughout your investing career, helping you grow and protect your wealth. Now let's explore seller financing options and see how your strong financial profile can open even more doors. Your financial profile is your foundation. Every successful deal is built on it. It's non-negotiable for zero-down success. Without it, your options are limited. Let's dive into seller financing and discover how you can leverage your financial strength for creative deals. Seller financing is a powerful zero-down strategy. The seller acts as the bank, offering a private mortgage. Sellers benefit from passive income and tax advantages. You bypass traditional bank underwriting and negotiate terms. Look for sellers who own properties outright. Phrases like seller motivated or owner will carry are clues. Approach for sale. Buy owner listings for flexibility. Always formalize agreements with a promissory note and legal review. Seller financing requires a formal business approach. It's a win-win for both parties. Now let's leverage partnerships and joint ventures. Seller financing is a direct path to zero-down deals. Partnerships are a powerful way to cover costs and access resources without using your own money. By joining forces with others, you can take on bigger projects and share both the risks and rewards. Team up with a money partner who provides the necessary cash for the deal, allowing you to move forward even if you don't have funds yourself. In return, you handle the work, finding great deals, managing renovations, and overseeing the project from start to finish. Structure your deals for mutual benefit, often with a 50-50 profit split, so both parties are motivated to succeed and share in the upside. Always draft a detailed joint venture agreement to clearly outline roles, responsibilities, and how profits will be divided. Money partners can be family, friends, or professionals, anyone who trusts your expertise and wants to invest alongside you. Present a compelling deal package with hard numbers, clear projections, and a solid plan to build confidence in your proposal. Remember, your skills in finding, negotiating, and managing deals are valuable assets that you bring to the table. You're offering a genuine business opportunity, not simply asking for a handout. So, approach potential partners with confidence. Frame your partnership as a win-win venture, where everyone benefits and grows together. Now, let's explore creative strategies like lease options and rent-to-own, which can further expand your investment toolkit. Partnerships and joint ventures are among the most common and effective paths to real estate success, opening doors to bigger opportunities. Lease options let you control property with minimal upfront cost. Combine a lease agreement with an option to buy later. Pay a small option fee to lock in the purchase price. Sellers benefit from steady income and a potential sale. You gain time to improve finances and test the property. Ensure agreements are clear and legally reviewed. Lease options are low-cost, low-risk entry points. They offer flexibility and potential appreciation. You're essentially test driving the property. Now, let's discuss hard money and private lenders. Lease options are a strategic way to enter real estate. They provide control without immediate ownership. Hard money and private lenders offer short-term asset-based loans. They focus on property value, not personal credit. Hard money is ideal for fix-and-flip projects. Expect higher interest rates and upfront fees. Private lenders are individuals seeking better returns. Network to find these lenders and present solid proposals. Show them how they'll profit from your deal. De-risk projects with thorough research and planning. Hard money is for short-term high-return projects. Private lenders offer flexibility and lower costs. Now, let's find motivated sellers and off-market deals. These lenders are crucial for scaling your business. Motivated sellers and off-market deals are key to zero-down success. These sellers prioritize speed and convenience over price. Look for distressed properties and direct-to-seller marketing. Drive for dollars and search public records for leads. Network with wholesalers and real estate professionals. Understand sellers' needs and craft creative offers. Your offer should solve their problem, not just be the highest. Empathy and problem-solving are crucial in negotiations. Off-market deals offer unique opportunities. Now, let's wrap up your path to zero-down investing. Finding the right sellers is the final piece of the puzzle. It's the art of the deal. You've got a 7-step playbook for zero-down real estate investing. From understanding concepts to finding motivated sellers, it's all here. Remember, this guide is a starting point. Do your own research, educate yourself, consult professionals, and network with investors. Thanks for watching. Like, subscribe, and comment below. See you next time.